Welcome to this week's episode of Canadian Mortgage Hangout TV. My name is Gordon McCallum. I'm joined by the lovely, the talented Rob Campbell out in, it's not Guelph
Barry.
anymore. Heck, I thought I'd remember.
Barry.
Barry. Not to be confused with Burnaby.
This is
How are
true.
things in Barry?
Things are wonderful, Gord. Thanks a lot. Everything's going well. Yeah.
Good. You're looking sharp as always. You got the tie
Yeah.
on. I almost wore a tie for this today, but then I looked at my sport coat and I had that I was going to wear it, and I noticed a giant hole in the linen fabric on my arm. So
I just noticed that Lloyd and I both have cufflinks on today. Gord, don't let us down. Oh!
There it is. There it is.
GDM, buddy. Never disappoint. All right, and we've got a special guest, a friend of the show, a fellow who's been with us before, Double L, Lloyd Pritchard. How are you, Lloyd?
Excellent. Thank you, gentlemen.
So one of the things we're going to talk about with Lloyd today is the transition from lender. I don't know if that's the dark side. Is that kind of like a conversion? Hey?
I'm on the dark side now.
You're on the dark side now?
Yeah.
Well, I guess it depends on who you ask. But, okay, that's an interesting perspective. So we want to hear a little bit more about Lloyd's transition from business development world, formerly at Merrick's Financial, and now to becoming a broker, and some of the pros and cons of that. And we'd love to hear about what's working well for you and what some of the challenges have been. In case you never know, I know brokers who have gone the other way too. But you never know who out there is thinking about a career change, wanting to stay in the industry, and wanting to hear sort of from somebody who's done it. So Lloyd, kick us off. Like, how long have you been doing this now? When did you make the move, just for our viewers? Oh, and if you're following along, you're watching live, we'd love to have you join the conversation on Twitter, #CMHTV. You can contact me at Gordon McCallum or the Rob Campbell at the Rob Campbell. We'd love to have your questions for Lloyd and share them with him. If you want to tune in later, just watch it on YouTube or on our site, CanadianMortgageHangout.tv. So Lloyd, when did you start? When did you make the decision to be a broker, and how long have you been doing it? What's been working for you?
It was about 4 or 5 months ago now. I made the transition actually in June. Everybody knows I left Merrick's late last year, and looked around at some different options, and said no thanks to a couple of things. A couple of folks said no thanks to me, which is to be expected, and it sort of came about by a couple of contacts that I have and some guys that I'm working with now. So it's a little bit different as opposed to just jumping in cold and saying, hey, this is what I want to do. I am working with another guy that has been in the industry a long time, and we've got some programs in place and that kind of thing. So it's a little bit different than maybe, I don't want to say your typical transition. I don't know what your typical transition is, but that's what I'm doing. So it's been a few months now. Things are going in a pretty good direction. It's a challenge. That's not news to any of you guys, but it's definitely an eye opener. There's a lot that you think you know when you're on one side versus the other, and then when you're actually on that other side, your eyes get open pretty quickly.
Okay, well, so what have the biggest surprises been? Give us the top 2 or 3 surprises for you coming from that side.
Well, it's surprises and not. I mean, my wife's a broker, so I had some insight as to what the day-to-day is like.
And she lets you do this?
Well, I don't know. If you ask her, the answer might not be the same. But let's go with yes, because she's probably not watching.
Okay.
So, it's one thing that is it's there, but you don't really realize it till you get going. Is just initially, as lame as this might sound, just the out-of-pocket expense, the things you've got to spend money on left and right immediately before you can even really get going. So that's a challenge, but easily overcome. And then just getting the administrative stuff set up properly so that you can actually get going. That was a surprise to me. Things like your Philogix ID and your license moved over and all that stuff good to go. I mean, you can't really do anything until that's in place, and so that takes time. And there's not a lot of ways you can speed it up. You just have to go through the process, and away you go. So that was enlightening a bit in terms of how long it takes and how much of that there is to do. And then getting out there and just figuring out what you want to do and who you want to be and what your strategy is, and getting things rolling. What do you do first? Who do you talk to first? What's your plan? And you realize fairly quickly that if you don't have a decent plan, I know you guys talk about this all the time, you can be kind of going in a bunch of different directions without really knowing if you're making any progress or not. So it's definitely an eye-opener. From the administrative side, just one of the things, and I apologize if there's anybody there from watching, but the Philogic stuff is, I hear guys complain about it all the time when I was on the other side, and now when you're in it and you're actually the guy inputting stuff and trying to navigate screen to screen, you're sitting there going, wow, this could use a tweak or two. So
Rob, didn't you? I think Rob mentioned that there's a new release coming. Rob, tell us about the release.
Yeah, I just got an email from D&H this morning, actually, ironically enough, that you're saying that, Lloyd. The D&H is going to be down this weekend because apparently all the staff in the office at D&H, especially towards Philogics, are going to upgrade to Windows 95. Back to you, Gord.
I thought it was Windows ME. Maybe that's the next release. Here's a question I have. Why, when it's a web-based platform, does it need to be down at all? It's a web-based platform. I mean, you can kind of run an upgrade on a different
it's going to be down.
It's all cut over.
Yeah, it's going to be down so that they can do real-life, I think, real-time updates to the algorithms and all that stuff. I don't think it's as easy. I understand what you're saying, Gord, but I don't know that it's that high-tech. I don't know, but I know other corporations, you're right. Like with Facebook, they've got coders offline with simulation, doing code and blah, 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 and then it's literally on the fly, it's upgraded, right? So maybe it's not that quick, but we bust D&H's balls quite a bit. It'd be great to maybe go to D&H and have them on and ask them when they want to get into the 2000s. Back to you, Bert.
Usually, if you're watching, I know you were watching on last week because you were on the show. You're not there anymore, so we're allowed to pick on you. All right, so Lloyd, D&H is the Philogics user experience. You feel could use a little bit of work. They are now supporting Internet Explorer 6, I believe. So change your browser, upgrade your browser if that's not flying for you. What has been? You talked about some of. Go ahead, Rob, and jump in here if you've got a question for Lloyd, because.
Yeah, sorry, no, just as we're cracking on D&H, I actually sat with the gentleman, and his name escapes me now, but I sat with him from Marlboro Sterling. Oh, yeah. So I guess that's more web, maybe. Great guy, fantastic guy. So anybody out there that wants, I'm just putting a plug out there. I'm not making $50 off of this ad placement, I promise. But good people over at Marlboro Sterling. That's all. Sorry.
I think he'd be sending you a mug. We hand out mugs like they're candy on CMH TV, but I haven't seen a mug from anybody else yet. Maybe a little product placement instead of money would be a start.
Yeah.
Okay, Lloyd. So, surprises aside, what's been exactly as you expected, and or maybe even a pleasant surprise, something that you didn't expect but that's worked out better than anticipated, and what kind of tips are you getting from your wife, or are you guys really keeping it sort of separate so that there's no? Are you guys working together? Is she coaching you? What's the deal?
We're separate. I mean, she's actually at a different firm, and I have to say this wasn't a big planned out move where I had laid things out and it's like, okay, I've got a year and I'm going to set all this stuff up. It was sort of a shorter term decision. So one thing I would say to people, if you're looking at making the transition, give yourself some lead time. Don't jump out of your job quite yet. Maybe spend some time planning and getting everything set up. Because when you do jump in, you're in it. I mean, you can't in my opinion anyway, you can't just kind of ease in. I think you need to jump in and go whole hog. Anyway, but with that, our focuses are a little bit different. The areas that I'm working with in trying to focus on in terms of deals that are a little bit bigger, a little bit tougher, maybe the traditional what you call B or C or whatever, whereas she does a lot of first-time home buyer, in the box kind of lending, the typical A stuff. So our markets don't overlap that much, and she's got an established referral network and group that she works with, so there's not really a lot of crossing paths. I will say she's been super helpful on the the day-to-day, like how do you actually get stuff done, and whether that's Philogics or whether it's documentation or disclosures or that kind of thing. There's a whole world of stuff that when you're on the lender side, you don't really see it. And you kind of dismiss some of the complaints that brokers have, and I'll put this as my official putting my hand up and apologizing to those guys who I sort of dismissed with their bitching and moaning about some of the paperwork. You've got a legitimate complaint about that, but so the day-to-day, the actual how you do stuff and put paperwork together, she's been great. So as an aside, I think a bit of advice that I would take from that and passing on to people is find somebody that you can use as a resource that will help you with that day-to-day stuff, and learn from them about how you actually put a file together and how you put docs and how you do the audit checklist and all that kind of stuff, because there's the going out and getting the deal and dealing with the realtor, the client, and all that kind of stuff, but you still got to put it together. You still got to input it. You still got to gather the documents. You still got to paper the file. And, the lender's not going to walk you through that for the most part, right? They're just going to send you if you can put the deal together and get a commitment, they're just going to send you a commitment with a list of conditions. And you better know how to fulfill them. And so, it's things that when you've been on the lender side, you kind of know it, but you don't know it from a day-to-day living it perspective. And it's very, very different. And a simple thing like a disclosure, right? And in BC, and I think you guys are similar in terms of how your disclosure statement works in that, but we have a mandate. You have to provide a disclosure, but there's no mandated format for the disclosure. So there's the one in Philogics, there's the one from MBA BC, there's the one from our firm, and you put in the information and you get 3 different APRs. Now, the point is not so much the APR as it is explaining to the client all the different costs involved and that kind of thing, and I get that. But from a practicality standpoint, having it a format that really, there's 3 different ways to do it, and which one's right, and which wrong. Well, you're not going to know which one's wrong until FICOM audits a file for you, and then is nice enough to explain to you which one how you did it wrong. So there's stuff like that, and I'm fortunate where I've got a good support network in terms of my wife who knows how to do this stuff. The company I work for has got some great resources, so I'm fortunate. So I would say somebody jumping in, do some research in terms of the support network that you're going to have and the resources that you'll have available to you, because that stuff is going to be important.
Awesome, Lloyd. Thanks. Just a comment on what Lloyd was just saying about multiple disclosure forms and multiple. It's insane. If anybody's watching this that hasn't moved lately, I've just had the pleasure/misfortune of moving in the last month, and it was really good for me to go through that process, because for the last 4 years I've been on this side going, to clients in a roundabout sort of way, yeah, whatever, it's not that bad, it'll all get worked out. It's an eye-opener, man. Like, it's an eye-opener going through that process again. Like, we had moved 11 years ago, so doing it just recently, we constantly hear about clients saying, we'll do a follow-up call, and me personally, not the firm, but me personally, I've heard clients say, so much paperwork. Like, why was MCAP sending so much paperwork? Why was so-and-so sending so much paperwork? Well, comment here is, why do the lawyers, I don't know about out there, but in Ontario, the lawyers have the client sign the exact same commitment that we, who are licensed and apparently should know what we're doing, we have the client sign the exact same thing. So what the lawyer knows less about the terms and conditions of the mortgage than we do. Really, they understand the standard charge terms, but the actual commitment from the lender, they don't look through it. They're like, yeah, sign, 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 sign. So it's kind of, the systems and the multiple disclosure forms, multiple application forms, it's crazy. So a standardized way would be awesome, but just a little side note. Anyway, my question to you, Lloyd, is, gone are the days of just spraying out applications to lenders. Now, thank God, we've got things like efficiency ratios and closing ratios and stuff like that to help tone that down. But I've always heard about, and maybe you could speak about your experiences with Merrick's, and obviously not going too deep, but from the time an agent hits submit to the time that it gets canceled by the underwriter saying, Rob, why are you sending this in? This doesn't meet our guidelines. What's that cost? And then what's the cost on average, not exact, but what's the cost from application to funding for the lender, administrative, paper, blah, 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 blah. Can you kind of tie into that?
Yeah, I think so. And if I get this wrong, the folks at Paradigm Quest, I'm sure will jump in at some point and correct me. But it doesn't. There's not a huge difference. Like depending on how far it gets. Basically, once you've got it in and you've had to assign it to an underwriter and get it into your system and start getting an underwriter, that's where you start. The costs start, and they don't double or whatever when you get it into sort of the fulfilling conditions stage. And that part of it is, I think you as a lender, you sort of do a look back as opposed to break it down at the different stages. So I don't know that too many lenders would be able to tell you, okay, when it gets to step 2, it's this amount of cost, step 4 is this, step 6 is this, and by the time it gets to here, it's X. You usually look back and just on a general basis say, oh, it's X amount. I would say, as a real ballpark, you're probably looking just to look at a file when you start factoring in. Obviously people are your most expensive part, but you've got premises, all that kind of thing. You're probably looking at a few $100s a file just to get it going. And so what happens then is you look at your profit per file, and that's what sort of dictates your efficiency ratios. And so what would happen is, I know at Merrick's, the numbers that we worked with, basically, if I wasn't funding sort of 2 out of the 3 that I committed, we were losing money. And so you've got this big sunk cost, and then you don't, a lender's like a broker, and that's probably one of the biggest misconceptions out there is, a lender, a monoline anyway, doesn't make any money unless the deal funds. They don't get paid by the hour, from the wholesaler or anything like that. You get paid a commission on funded deals, just like a broker. So if you're going to invest hours and days and pay people and all that kind of thing, it's coming out of your pocket until you've got some revenue in from funded mortgages. And so the broker world, and particularly the monoline world, are really very, very similar businesses. You're a middleman. You're not lending your own money. You're being paid a commission to lend someone else's money, and you don't get paid unless it funds. And you incur costs along the way, and hopefully, you more revenue than costs. It's pretty simple. So, but from a lender standpoint, it's easier to show the actual cost. When you talk about a broker, it's mostly time. Well, what did that file cost you to work on? Well, I didn't outlay cash to work on it, but I invested time that I could have been using elsewhere. Whereas a lender, you're actually paying somebody. And unless everybody's on commission, which is very rare, you're paying underwriters and fulfillment people and turning the lights on and paying rent and all that kind of thing. So yeah, you're into files basically for a few $100s at least before anything really gets going. And then you're only making the money on the ones that fund, obviously. So that's why efficiency ratios have become such a big deal, because you've got to figure out where you're making money. And we always said I'd rather have 10 guys who send me who fund $1 million with me, but I only have to look at $1.5 million, as opposed to a bunch of guys that fund 10 million, but I got to look at 100 million in order to fund the 10. You're not going to make any money. So from my side, I get it. I got it before, but I'd like to think that I'm one of the brokers now that hopefully doesn't waste guys' time, like the others would. I'm very much, I get on the email, I get on the phone with the BDM, whatever, before I send it in. I really don't want to send that file somewhere where I don't think it's going to have a really, really good chance of funding. And you never really know until they give you an approval or not. But hopefully, I'm a little bit better of an example than some of the other guys. But it's because I know I have no excuse in terms of how I act with regards to funding ratios and that.
It wouldn't be very for you to ignore your experience on the lending side, or you ignore what you know about how that business works now that you're a broker would probably not work very well, or wouldn't reflect very well on you and what you've learned. So that's it's good that you're applying that knowledge. Lloyd, are you finding that now that you've been doing this for a little while, are you finding that you're able to sort of anticipate you mentioned documents earlier? Are you able to anticipate what the lender is going to ask for with more certainty? And maybe tell us how many lenders do you think, now that you've been doing this for a while, granted you're focusing on the B and C stuff, how many lenders do you think sort of ideal to work with from a broker standpoint to feel really comfortable and to know those lenders and their products really well?
Well, I think so. I mean, at the end of the day, on an A file, I mean, you need income, you need down payment, you need an appraisal. This is, unless it's your first mortgage ever, you kind of know what they're going to need, right? And we all know every file's approved until the paperwork comes in. So, paperwork-wise, what are you doing? Like, if you can't be surprised when you need to document the guy's income, or you need to show the down payment. Now, maybe it's because of my experience on the other side, I'm a little more in tune to it, but really, anybody who's been a broker for any length of time, I mean, how many files did you not need income and down payment and a property value? Like, it's all the same. So, yeah, I think so. It's the funky things that get you, and it's the rule changes and the ways that lenders look at different rules and interpret them, and then need the paperwork to satisfy that. It is challenging. I will say that there's an opportunity for some lenders to do a little bit better job with the credit fulfillment and that, but it's a thankless task, and I understand and I appreciate the challenges there. But they say they need piece of paper A because it's got 2 pieces of information on it. And I say, well, I can get you piece of paper B and piece of paper C that together have those pieces of information. And the answer is, no, we need piece of paper A. Well, okay, that's fine. I'm not going to get upset, but those are the kind of things. As far as dealing with lenders go, and I said this before when I was on the other side, is these guys that say, oh, I deal with 30 lenders, or I deal with really, why? That's ridiculous. I think you need a handful of A. I think you need some choices. I think you need to cover the bases in terms of guys that have different programs, but you don't need 10 A lenders. Getting into the B and C, a little bit different, because you've got really specialized guys that only do a certain area or a certain loan to value or a certain type of customer or whatever. So I think if you're doing that kind of business, you probably need to have a little bit bigger group to work with. But if you're doing A and you're doing first-time home buyers and high ratio insured stuff all the time, I mean, pick a handful of partners that you can work with, and and again, I'll this will never go away. Pick a trailer fee lender in there. Include it as part of your repertoire. It's just good business. But if you're going to try and spread your business around to 10 lenders, you're crazy. You're never going to do enough with any one of them to get on their radar screen. And so I think there's a balance between doing enough with any one so that they know who you are, and you get the benefit of some better rates or programs or whatever it is, and also, but not being so tied to them that if you have to move it somewhere else or you have to look at another lender, they have no idea who you are. I mean, if you do 80% of your deals with one lender, I think you're making a big mistake. I think if you don't do at least 10 or 15% of your business with a particular lender, I think you're spread too thin. That's my opinion, and I think there's enough guys in the A space that you can find that middle ground nicely.
Rob, maybe you're curious like me, but I want to know a little bit more about Lloyd's decision to kind of go the B route as opposed to the A stuff. And go ahead.
Like Lloyd is focusing more on the B? Is that what you're were you saying?
Yeah, and I'm just curious to know. You had a question as well, probably along those lines.
Well,
so go ahead.
Well, more, I've been asked where I think the business is going, and in my best uneducated, newbie-ish kind of guess, I think it is on that side. I think that it's going to get so tight that the banks are going to, and we've said this before. I've said this before a million times on any interview or show we've done, whatever. But the banks are just going to throw the cross sell at the client. They've historically tried, their best to get good margins on mortgages, but they traditionally kind of break even or even lose on the mortgages because they want the foot in the door to cross-sell all the other junk they can to the client. So I think that I think just because of the pricing is constantly going up for homes, for inventory, and I don't know about you, but wages don't. Canada-wide, I know we're always pretty sensitive on the show about identifying Canada as Toronto and Vancouver. But locally, jobs are being had, but pay's not really going up, is what I'm trying to say. So, your qualifications starting to get thinner and thinner, and I think the banks are just going to fight really hard for that. So, where I think the opportunity is the B side, and I think that getting into bed with branches that Lloyd was just saying, make sure you have a good alliance with a couple of institutions. Throw in some branches in there, especially TD. A lot of people might cringe at that because of their underwriting turnaround and whatnot. Now, TD's going through some changes on the broker side, but also remember that the branch level doesn't really do that much alternative stuff. So a decline from a branch like that might not actually be a bad deal. They just can't do it. So I think we're going to see more and more of that. I used to be against that branch relationship, which was stupid. It was just ignorance on my part. But I think there is a good alliance to be had there. And I'm not poo-pooing monolines by any means, or trailer models, but just picking your partners strategically. If you only need to fund $20 million at 75% efficiency at a lender, why would you send them 30? It just doesn't make sense, right? If you can have an alliance somewhere else with a different type of product or a different trailer fee or whatever, go that route. Why would you send $80 million to a lender that only requires $30 million as their top tier status? I don't know.
Lloyd, where are you finding most of your success in terms of acquiring clients? Where are you relying on referral partners? It sounds like you and your wife are in different institutions, so that's maybe not across, although you're in different types of businesses. I mean, would you refer your wife an A deal if it came across your desk, or would you write it?
Probably it depends. Right now, I mean, I've done a couple A. Depends who it is and depends how busy I would be with the other stuff and where it came from. If it was referred by one of the realtors and that we work with, obviously I'm going to handle that myself. If it's a a different personal relationship or whatever, I might just hand it over to her because quite frankly, she's probably better at it than I am when it's first-time home buyers and stuff like that. And just getting back to Rob's comments about the B and that, that's where I think I can add some value. I've been in lending for a long time, and I saw, and this is no disrespect to where I worked in that, but the A space, that box of insured lending, that little, nice little box that the A stuff fits in, isn't getting bigger. It's not, and so I don't know that me with my skill set, I don't know that I add a lot of value in a typical A space type deal where it's really cut and dried. It's really, that's not really where I'm going to be able to help a client and like I said, add value to it. I'm, and just putting their information into a computer and sending it to another computer and having somebody tell us, have a program tell us whether it's approved or not. There's not a lot in that for me. Whereas, if you're putting together deals and you're actually managing risk and pricing and stuff like that, that's where I think my opportunity lies.
So you actually want to work for a living?
I'd like to give it a try anyway.
That sounds ambitious.
Well, you gotta start somewhere, but it is a challenge, and so that's so. And right now it's more, it's more realtors, it's more some referral partners of the guys I'm working with, as opposed to out there generating all my own stuff cold from day one by being on Twitter or Facebook or whatever.
Right. Cool. Well, Lloyd, it's been an education. I appreciate you joining us on the show. I know Rob and I were excited to have you on today, and we're missing our cohorts, Jackson and Scott, today, but our best to them wherever they are. And we've got we don't have another mug to send you, sadly, but I know you've got one there. Thank you very much. Rob, do you want to do a quick little speed round with? I'm throwing you on the spot here, but do we want? Is Lloyd worthy of a speed round? He might. I know he's worthy of it, but is it something we want to inflict on him?
Yeah, absolutely. I'm not even prepared for it, but geez, random question. I got nothing.
I feel like I just dodged a bullet.
Lloyd, I'm not gonna let you off the hook so easy. Okay. If you and your wife were both competing for the same client, who would win and why?
Oh, jeez. I'll tell you, if it was a first-time home buyer, an A-space couple, kid, she would take my lunch on a client like that, no question. If it was a guy with a tough deal with challenge credit or multiple property or some funky thing that needed to be put together, I like my chances on that one.
All right. Have you had the mortgage mirrors yet? Have you actually lost sleep wondering about how to put a file together? Because that's something that we've all experienced, at least in our office, when people start, as they go through this period when they first begin of like stress. Like, oh, did I forget a condition? Did I forget a document? Did I get that in on time?
Yep. Yeah, absolutely had that. More so because we were looking at a couple options, and I thought we could go in a different direction, and then we couldn't, and then I had to sort of back up and go, okay, plan B is not going to work. What's our other, what's plan C? And it worked out, but there were a couple of moments where I was doubting the outcome of that one for sure.
All right, well, congrats on the move, and wish you all the best as you progress in your career as a broker. And thanks for sharing some of your experience with us and the viewers today, because I think whether you're moving from another position in the industry, like a lender rep, or whether you're coming in completely cold from outside the industry, as Rob and I have done, it's good to hear from other brokers and what they've been going through. You're not alone out there. You know that others are going through it, and sharing that information is one of the goals of the show. So appreciate you doing that with us today.
Oh, thanks, guys. It was a pleasure. Anytime.
All right. Have a good one. Take care.
All right.
Goodbye.
Bye.